there are three requirements for us to want to put on a trade. Trade definition or trade selection. We need good or perfect trade definition. That means that our stop, which is not a money stop, it's always going to be a market stop where the market tells us we're wrong. If I'm short, I know that I'm wrong at, X price. If I'm long, I know that I'm wrong at X price. Perfect trade definition or perfect trade selection would be, I know I'm wrong at X price and I'm going to reverse at X price. I know that I'm wrong being short at 29, and at 29 and 29 is going to be my stop. And at 29, not only will that be my stop, but I'm also going to reverse at 29. That's perfect trade selection. So that's the number one requirement. The number two requirement is that we need to find the matchups. 77.40. We know that level in 77.40 in the crude is not in the crude. I'm sorry. We need to find the matchups in the equities anyway. 77.40. We know that's a big level in the Nasdaq. 77.40 kind of matches up with 29.30-ish, and at least in the way that we're trading now, certainly not a month ago or 2 months ago, that would have been 200 points off. But anyway, the point is that we look for matchups in the relative price action of the day. That's not going to be found in charts. You will not find that in a chart, by the way. You will only find that in watching the price action. Which is leading which? You're not going to find that by looking at the net change. You're not going to find that by looking at the net percentage change. You're only going to literally watch and find those matchups by watching the price action on the dome or in the dome. The third is time frames. We always want to make the highest probability trades at the highest probability times. So if the highest probability trades are number 1 and number 2 are fulfilled, then we have to look at the time frame. If it's before 10:30, then yeah, let's go ahead. If it's 12 o'clock, well, we have to look at how strong our matchups are, or 11 o'clock, anywhere between 12 and 2, or 10:30 and 2 Central Time. We have to look at how strong our two first requirements are. Yesterday, I made a trade in the Nasdaq at the low of the opening range, sold them out of the opening range at 77.30, or no, it wasn't 77.23, I think, whatever it was. I sold them, paid for my trade, and then I took them all the way down to 75 or to 76.50, 76 to whatever the low was. And I took them back. I took them off at 76.75 in front of the target, most of them, and I scratched some too. But that was because I had the first two requirements fulfilled. I didn't like the time frame, but I took the trade. Now, if we don't start getting rewarded soon, if the market doesn't start to work in my favor pretty quickly, then I'm going to get out. Please listen to me when I say that. If I select a trade, if I sell 25s in the S&P and the market doesn't get under 25, if it meanders around 25.5, I'm just going to get the fuck out because I can always put them back on. Why do I want to sit there with that kind of risk exposure for nothing? So you guys who sat with trades on and sat with trades on and sat with trades on today, after I said that 9 o'clock or 8:30, actually 8:40, that's it, I'm done. I've got no reason to trade. I don't see anything on this board that I'm going to trade. Why would you guys think that you're going to find something on the board to trade? Please listen to me. Please trust me.